Sandeep, good morning. Thank you for joining us. I'll pick it up from where we left last time.
Yeah.
We left, I think we spoke in the month of July last, and your view was that global markets will top out and Indian markets will correct. So the good thing is that we've not corrected much, but we've not gone higher as well.
Yeah.
So you think you would like to change your call, or are you still confident that a global correction is coming?
See, our call was not on India, our call was on US market, and call was that we are entering into a volatile phase, and we have seen that volatility has been played out 200 up, 100 down, and not only for India, globally we have seen. So we stick with that call. We think it will, that volatility expansion phase has not peaked out as of now, and I think it can take maybe another 2 months time before it peaks out, okay? But as of now, the pattern which we are looking at, I think is a expansionary phase, but not the climatic one. So I still like to be more cautious at these levels, though we are not negative in India long term, but this Q3 we talked about, we maintain that view that we like to remain cautious on Q3.
So you're calling for a 5 to 7% correction in global markets, 3 to 4% correction for Indian stocks.
Could be difficult to say that way, but we're saying maybe if market correct globally 8%, we will correct not more than 40-50%.
And how long would this corrective phase last, if at all
So
it has
we have talked about, based on our cycle theory, should be around Q3, so maybe maximum October.
But you don't think on the upside there is too much of headroom left for Indian markets? I
No,
mean,
we are
first
not.
A correction first and then a rise after that.
Yes, small correction and then could be a massive up move. 2018 we are very bullish. So
How
we are,
significant could this up move be?
so we maintain our call of 14,400. That's the level which we have said that will rupee heading towards 58 levels, and so we by mid of 2019 or March 2019, that's the level we are looking at. So it's a good, very good
Why
numbers.
are NBFC stocks moving the way they are? I mean, I'll give you a classic example here. Aditya Birla Capital, the private placement was done, I think, in end of June at 145 rupees. Nothing has changed for the company, but what has changed is the market's view for that business, because for a business which was valued at 145 rupees, it was given in a market cap of 32,000 crore, makes a debut at 50,000 crore.
So I will put in a very different way. It's not about just NBFC. It's all about IPO which comes. You know, the floats are not there. So we look at most of the IPOs have done extremely well. Other NBFCs are lifted. Why other NBFCs are not giving that sort of returns? Okay. GM is also there. Okay, Edelweiss has moved up. Indian Four Line has moved up. Reliance Capital is moving up now. So other listed entities are also there. They could have also moved up by with that logic. The logic is simple, that is under ownership is there, free float is not there, and you can easily take these prices up. That's the game which people are playing for last 2 years in the IPO market.
Yeah, that seems to be the case. And talking about the IPO market, you know, quite a few paper is going to hit the markets now. We've got AB Capital, which hit the market on Friday. You've got Reliance Home, which is slated to come out, etc. Anything out of the new lot that interests you in particular?
No, and I don't think anything specific we are looking at, frankly speaking.
So what are your top ideas? What are you telling the clients to buy and sell?
So when we met in the month of July, we talked about defensive. So you've seen defensive, FMCG has performed well, pharma has started performing well, despite headwinds in Infosys, IT sector has performed well. So our entire defense pack has performed well. So we like to concentrate right now also on defense pack and then move towards high beta name towards October end.
You know, Ayesha, I looked at the data over the weekend. The forex reserve, our forex reserves are now marching towards $400 billion. Given that where the export growth is, I guess somewhere Reserve Bank of India and the government would like to take serious notice of the fact that the strength in currency is no longer helping the economy. I mean, you need the export propeller to revive and survive. How much can you really, you know, dance and jump around on the domestic consumption and domestic industrial revival? The domestic industrial revival is not happening. Consumption is slowing down. Export is dead. And for export to pick up, currency has to depreciate.
Yeah.
It makes sense to take a contra call on the rupee also now.
I have a very different opinion. Okay, see, if you really sit down and analyze entire Modi philosophy, okay, where people have not got it right, that he is talking about his focus is more of a domestic economy, and in that scenario it makes sense to rupee to be strengthened. Now you look at also with a global background, rupee was depreciating when the entire DXY is moving up. Now we believe DXY has peaked out from a longer term perspective. Okay, with that background, emerging market currency should do quite well.
What is DXY? I'm just
Dollar index.
Dollar index has peaked out.
Yeah.
Okay. So I'll talk about private banks. the way private banks are surging and the way PSU banks are falling, it appears to me that even though private banks is a crowded trade, this is an evergreen trade. The credit growth numbers are not there. Banks like SBI and BOB are now faulting with their guidance.
Yes.
I don't think when was the last time I remembered a decent guidance and a solid reporting by any of the private PSU banks.
Yes,
So I will put it very simple. You know, when this recovery process started, people started participating in the PSU bank, and entire PSU index started also moved up. Okay, and post demonetization there was some swing which we have seen. But if you really look at fundamentally, also people have huge discomfort as a house. We also have huge discomfort on public sector bank. I think from I will not say from an extraordinary ownership, the people who have participated in this rally, they have shifted towards private sector bank, irrespective of the valuation. So it's a urgency to move out from the PSU. That is the theme which is playing out. So it's not about the valuation people are looking at. People are not comfortable and then just want to move out from that space. And
but Sandeep, you were making the point earlier that defensives is the place that you think one needs to bet on. That's becoming a somewhat discovered story. We're already seeing that play out in pharma. When do you think would be the time when you would say, okay, no, not anymore. It's time for me to shift out of defensives?
No, I think particularly FMCG, if I look at, I think they are coming out of 3 years of consolidation. So I'm not looking at even 3 months move. I'm looking at even could be next 3 years move can happen. And we have seen in last 2 or 3 years the sector rotations moves are very, very fast. Okay, people generally miss out the big move which happens and tend to follow. It happens in metals and then people are chasing. It happens in some of the other names like ITCs of the world, and now people are trying to participate in this thing. So I generally like to look at more from a macro perspective. If we are calling this is a risk of phase, okay, where yen can appreciate. So if it's a risk of environment, the call is not about India specific alone, because ultimately we are globally linked. Okay, in a risk of environment, I would like to align my portfolio with related to risk of call. So defensive fits well. Okay, so that does not mean that we will turn negative after Q3 on thing. We are positive long term. Maybe I will reduce my exposure in defensive and maybe increase my exposure towards mid-term.
But are you exposed to IT pharma at all? No.
Pharma selectively.
Pharma,
Yes.
What do you mean pharma?
Oro is our topic, has been a topic for a long period of time, remain our topic for that. We still like Cadila from these levels.
What is your price target for both?
I think if you ask me from next 2 years perspective, 3 years perspective, 2-3 years perspective, I think has a potential to give you 100% return from these levels. Okay, the entire pharma space is also going to a consolidation phase. We think it's a time to identify stocks and from a 2-3 year perspective rebuild exposure in these levels. It has reached a stage where people have extremely bearish. We have seen a stage like under ownership has been, we are reaching a stage of under ownership. That's a time when you start looking at these names.
You just touched upon metals as well. Is best of the rally already behind us?
I think we are positive from a longer term perspective, because if dollar index is peaked out from a really long term perspective, I don't think you are going to see 102, 103 levels for next many years. Okay, with that background, base metals and the metal index looks for a buying opportunity. But if I look at on immediate basis, okay, our belief is that the dollar index is also reaching some sort of exhaustion. Okay, so around 92 level it can spike back to 94, 96 sort of thing, and that's the time metals can correct a bit. So I think small correction can happen. Okay, so but buy on dip strategy remains for metals.
You've liked Mahindra and Mahindra in the past.
Yes.
Now I'm not a big fan of the cars they make, and I'm speaking as a customer, as a consumer. But the tractor numbers are strong.
Yeah.
Can Mahindra be this one-trick pony where markets will not give too much valuation to their passenger car business, but they will get premium valuation, premium pricing because of the tractor business?
Yeah. See, our theme on Mahindra was not on the SUV base. Mahindra was more of a agri theme we identified. Okay, so both Escorts and Mahindra we identified. Escort done extremely well. Okay, so we are reaching a stage where Escort has given a massive move. Some of catch-up game will happen in on the Mahindra front also. So we remain constructive on Mahindra, and Mahindra is like a not grossly over-owned stock. So now you have to identify the over-ownership stock. Maruti is grossly over-owned, even with the fear of this electric vehicle and all those things coming. I think Maruti is heading for a de-rating in terms of P multiple, not in terms of earning expansion, but the P de-rating can happen, and that could benefit maybe Mahindras of the world.
That's an interesting take. Okay, Sandeep, we would have loved to chat more with you, but we're going to let you go on this note. Thanks so much for joining in.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.